Hi everyone, I'm Max Friar, founder and managing partner of Calder Capital, and joining me is Hannelore Jones, our director of operations. And we've been speaking recently and decided that we'd give kind of this impromptu update on the condition of the market and some things that we've seen change over the course of not only my career, but just in the past few years. And so Hannelore is going to be asking me a series of questions. Hopefully I'm prepared for them, and I'm going to try to give the best answers that I can to these questions.
Tapping a little bit more on the buyer side. So, Calder works with a wide array of buyers, PE groups, family offices, strategics. How have you seen PE evolve in the middle market, and what should owners understand when they're choosing between a PE buyer or a strategic one?
That's a good question. Private equity has evolved a lot and become prolific over the past 20 years since I've been in business. When I started in this industry in 2005, PE really wasn't a big factor, and things really didn't talk about PE a lot. Now it's every conversation there, and PE has been coming down market too. So looking for bolt-ons. Usually very professional, very aggressive, very intelligent, sharp groups. And I think a couple things to think about versus strategic, so that a private equity buyer is typically buying, and they don't necessarily have people in place that are just going to come in and run the business, right? So they are much more interested in ownership and management teams, rolling equity, being ready for that second bite of the apple, but they want them to stay. Because again, they're trying to consolidate maybe some financial items, and they're really leaving the business to operate and provide resources and benchmarks and guidance to it, while they go and they acquire more so they can eventually, sell it up the food chain. So a lot of owners have a negative view of private equity. And I don't think some of it's deserved, some of it's not deserved. All right. And a lot of it's circumstantial based on deals that have happened. But ultimately private equity is, what are they doing? They're taking money from investors. They're trying to buy things. They're trying to make it better, and they're trying to sell it to return money to their investors. Right. And it doesn't mean that they're just laying down the hammer and making everyone's life difficult, but you can expect that it's going to be more tightly run generally than it maybe was before, right, for private equity ownership. And they do want to align incentives. So they want to align the incentives of the previous owners, the incentives of their investors, the incentives of the employees. So I think generally private equity are very good operators of businesses. And I think that to a certain extent, a business can retain a level of autonomy through private equity acquisition versus a strategic. So if you think about a pure strategic buyer, they may be willing to pay the highest price, but that's often based on cost synergies and reduction of overhead and certain people. And they might not want the previous owners to be part of the business, right? Because they have leadership already established, right? So I think there's a myth that strategic buyers are always the best buyers or the top payers. I think it just depends on the situation. It also depends on what does the owner want for the future of the business, right? Oftentimes small strategic buyers are the lowest payers because they don't need it, right? They'll buy it if the price is right.
Right.
So a lot of things to consider there. And we haven't talked about individual buyers either, or entrepreneurs, but they can oftentimes be a really good way to continue the culture and the legacy of the owner as well. So, and they can often pay very strong prices.
That makes a lot of sense. Are you seeing one buyer kind of coming ahead in most deals that are closing currently?
It depends on it's just going to depend on the type of deal and the size of the deal. I mean, again, if you're in one of those like home services, or if you're in one of those technical people going out in the field and performing something, we're seeing private equity mandates really hone in on those types of services. And generally speaking, if PE if they're looking to bolt on to their platform, they are often willing to pay more than you might think in order that they get that opportunity and their competitor doesn't get the opportunity. And the very simple analogy would be, well, maybe a fair market multiple would be a 5. They might be willing to pay a 6, right, because they're going to sell for an 11, right?
Okay.
And so they don't want to, but if you make them feel competition, they will pay more.
It's interesting.
Yeah.
Very interesting. Looking ahead over the next couple of years, are there any major shifts that you can predict or maybe kind of see the writing on the wall coming in how deals are executed?
I think the silver tsunami has been a silver trickle. I feel that that's picking up some steam. I feel like just from a age perspective, demographic perspective, many of these owners have to do something in the coming 5 to 10 years. We don't see many businesses that are operated by folks that are 80 years old. Sometimes we do, but there's increasing amounts of businesses that are operated by folks that are 65, 75 years old right now. And it's just, they have to do something, right?
Yeah.
Many of them have not planned well, but still have very saleable businesses. So I see more sellers coming to market. I don't necessarily know that price and valuation alignment are ever going to be solved, right? I think it's going to continue to be a challenge. Sellers always want more, buyers always want to pay less. It's just a simple fact of life.
Yeah.
I think on the buyer side, entrepreneurship is becoming very trendy. I don't exactly know what I think about this. I'm a big fan of entrepreneurship in general. One of the reasons I'm in this business still is because I love working with entrepreneurs, whether buyers or sellers. And I think entrepreneurship is the backbone of this country. So I'm encouraged by that jolt of entrepreneurship going through the United States right now. However, it's not for everyone. And so there'll probably be a lot of mistakes that are made out there, right?
Yeah.
But I think that what that means is deal activity will continue to pick up. It should, barring some catastrophe, well, which those are always looming in the shadows somewhere. There's kind of there's a lot of discussion right now about some of the extended hold periods for private equity. I don't necessarily know how that shakes out. Some people are predicting private equity companies will be mass shedding these orphans or closing them. I don't necessarily think that's true. So I don't know how that's actually going to shake out. And some people are also predicting that it'll mean there'll be less ease with raising funds in the future because investors aren't seeing the performance that they were led to believe would happen. I doubt that, because I think that 20 years ago, it was unique to have your wealth advisor say, hey, we should allocate some of your net worth to private equity. That is no longer unique.
Yeah.
Now private equity is coming down to like the Main Street investor. And people, frankly, are sometimes a little bit more excited about investing in private business than they are in big public companies that just seem like behemoths that you have no influence over, right? So I think, just like I like working with entrepreneurs because it feels real. I think private equity feels a little bit more real than investing in, the S&P index, right? So people are, especially business owners that have accumulated a lot of wealth, they tend to be pretty opportunistic and they'll take a chance. So
Yeah.
I think money's going to continue flowing into private equity. That's what I think.